Good day traders, my name is John Jacobs for RMDTRADER, and for this week's Market Fix we would like to do things a little bit different. At the moment you are looking at a daily chart of AMD, that is Advanced Micro Devices, one of the Nasdaq listed stocks that we offer for trading at RMDTRADER. And something that I'd like to point out is look at this beautiful bullish rally that we saw, and that rally actually kicked off right on the 20th to 21st of July. Now, what if I told you that this 20% increase in this stock's value was actually sent out to our clients as a trade idea or a trade setup idea? So, before you think I might be making things up, here is a link to our website on rmdtrader.com where we put out this trade idea, and also why we were thinking that this might be a great opportunity for traders to get on board this trade with an excellent risk reward setup and potentially get ready to make some great gains. Now you can go and look at this link for yourself, but let me explain something to you quickly in terms of classical technical analysis and how this was actually possible to predict this move with a high probability turnout. Now, just looking at this chart, and we are looking at a daily chart as I've mentioned before, if we look back to about the beginning of 2020, we can see that the market has been in an upwards trending phase for quite some time, with a very large consolidation phase, almost 24 months, starting in about August 2020 and up until very recently, where we saw a breakout. Now, what we see here on the chart is what we call a rectangle, and as you can see, we have a very clearly defined upper boundary. Actually, I've already defined these boundaries. We have resistance over there, and then once again for that same boundary we have quite a couple of tests of resistance over there and once again over there. The same can be said for the lower support boundary. We can see that there is a very specific level that was respected for this stock, and that was about $73, and you can see how those levels were tested multiple times, both in terms of resistance as well as support. Now, typically, what we do expect to happen after a lengthy consolidation like this in a rectangle is we expect a breakout either to the upside or the downside through one of these either upper resistance or support boundaries. But because we know AMD has been trading upwards for quite some time, so what we did notice, and I've mentioned this in the technical overview that we post on the website, we can see how price has previously respected the 200 moving average. That's that red dotted line you can see in the chart. But as soon as I saw that rejection off of that 200 moving average, and that was also a move towards the middle of this, or the center rather, of this range, I knew there was a good chance for price to bounce off of that 200 moving average and break higher should we get above that monthly pivot. So what we could see happened on the chart is exactly that. We saw how price got rejected from the daily 200 moving average, moved up through that monthly pivot, and then started to rally higher. It did eventually come down, or just briefly came down, retested that monthly pivot, and from there the price has just been making new highs, all-time highs, and is currently trading almost 20% higher from where we actually made the call. Now, what I'd like to do in this video is I'd like to go over a few markets and show you how we could potentially identify, and how you as a trader could potentially identify similar setups in the markets. This is not restricted to only stocks or forex, but you can apply this to anything, cryptocurrencies, commodities, anything that you can trade through us as a broker. You can apply these classical technical analysis principles. So what I'd like to do is I'd like to go through my usual watch list, starting with the US dollar to South African rand, and just show you how I've previously identified setups and how I currently view these setups as potential opportunities going forward. Now, looking at the USDZAR, we have previously mentioned, if you've watched our videos, we have mentioned this inverted head and shoulders pattern, which, as you know, inverted head and shoulders or a standard head and shoulders is typically a top or bottom pattern. Now, what I do have here is a 10-year diagonal support line. Now, if I were to go back to the weekly to the weekly time frame or the monthly time frame, we will be able to draw this diagonal support line 10 years back to see that it was tested quite a number of times, with price always being rejected from it and finding support from this level, this dynamic level. So what we have on the chart over here is we can see that we had this inverted head and shoulders starting to play out. The market then retesting that breakout level, and has now started progressing in what could be a reversal as we expect the US dollar to strengthen against the South African rand. Currently, we are once again on a level of support, both diagonally as well as horizontally. So this 1455 level is currently a level of support, and how we know that is because it has broken that level previously, currently coming down, meaning because that level was previously resistance, and after it has broken through it, it now becomes support, meaning that there's a very high probability for price to continue in the direction of this breakout higher, and meaning that we currently have a very high probability setup for a move higher. In terms of support, I love using pivots, as you might have known. So I usually just use a trading platform that actually does allow pivots to be plotted. And I plot my pivots, and I can see for this week we have the daily 200 SMA coinciding with the weekly pivot, meaning a break above this level would be very bullish, as that is currently a level of resistance, and a move above that will be considered breakout, and we expect price to move higher towards additional levels of resistance. In terms of resistance, I have drawn this blue zone, and we can see that previously price has found some resistance in this area, meaning I'm expecting some resistance once price reaches this area. And just looking at our pivots once again, I can see that we have our R2 weekly pivot at the 1517 level, also very close to that diagonal level of resistance. So that would be a bullish target for me for this week, and perhaps for the weeks to come if we do not reach this week. And in terms of a breakout level, as I've mentioned, that weekly pivot coinciding with the daily 200 moving average would be my breakout level. That level sitting at 1470. In terms of support, I suspect that we would have some support right where we are currently trading at about 1455, as that is that diagonal level. And in terms of a move lower, we should have much more support around that S1 weekly at 1440, and that is because we have our S1 weekly there, and that's also the previous breakout that we saw from that inverted head and shoulders pattern. Now, just looking and browsing quickly through some of our other markets, we can have a look and see if we can see similar opportunities. Now, on the EURUSD, what we can see is that we had a trending market that has consolidated with two different patterns. Firstly, a standard head and shoulders pattern that played out to its target. We then had a large inverted head and shoulders target, which then failed. And a failed head and shoulders target can also be used to project a target to the downside, and I'll just quickly explain to you how that is done. So typically you use the length from neckline to the head and just project that down from one of those shoulders, and that is how we get that target of 1.151. And typically I would also look to see if we can coincide that level with one of the previous areas of resistance when we are looking for a new level of support. But what we can see currently is happening is we can see that after this price started to sell off, we had this a falling wedge. We had a break of that to the upside. A falling wedge typically has a target very near to the upper end of its wider end of the wedge. So that would typically coincide with that level of the daily 100 moving average. So I will put my bullish target very close and near to that level, 1.197. In terms of a breakout, for price to actually break out to achieve that level, that would be at this very important level, right where we see the highs from Friday. That is at 1.190. We can see that we have that level of support and resistance previously. And then in terms of a break below support, if price moves back below that low from Friday and also the weekly pivot, there's a good chance that this pattern will fail, and it will continue to move down towards that inverted head and shoulder, or that failed inverted head and shoulders target at 1.151. Obviously, that's quite a big target, meaning there's a chance that we will not see that this week, but only in the coming month. Meaning for this week, there's a good chance it will only move back towards that diagonal support level that we can see over there drawn in light purple and close to our weekly S1, and that is currently at about 1.178. So that would be a short target should we break back below that weekly pivot. Looking at some of our other markets, we can see we have the GBPUSD, also a very lengthy period of consolidation, something very similar to what we saw on AMD actually, where we had a long trending market followed by a period now of consolidation. We have this rectangle with very clearly defined upper and lower boundaries. We have briefly broken below that lower boundary, but that level was quickly bought back by the bulls, meaning we have moved back into this rectangle. Currently, we are struggling with that daily 100 SMA. As you can see, we are seeing some price rejection, meaning there's a very good chance at this stage that we see price retest one of these lower levels, and one of those levels will probably be somewhere in the vicinity of that weekly S1, because that also coincides with the daily 200 moving average. So that would be at 1.376. And sorry, I'll rather make that orange one, because that is usually the support level. And then in terms of a break below that, I would expect a move much lower, perhaps towards that weekly S2. That is the bottom of that previous bearish channel that we saw price moving in. And in terms of that break to the upside, I'll see that as the monthly pivot for July, and that's a 1.395. And then in terms of a break above that, I suspect a move towards the weekly R2, which coincides with the current monthly R1, would be in order, and that is also once again very close to that upper boundary at 1.412. So just looking at some other opportunities, let's look at the AUDUSD, that's the Australian dollar USD, a very big inverted, that's a standard head and shoulders pattern. We can see price has broken below that pattern, came back to retest the neckline, and is currently moving down in this wedge towards the projected target all the way down at 0.720. So that would of course be a bearish setup and opportunity for you guys to go short. Just looking at some other setups, USDJPY. USDJPY, a bit of a mess, currently trading on support from that daily 100 SMA, meaning there's a very good chance to see some support from this level, as this level is currently support and the trend is still up. We can see that by price trading above the daily 100 SMA, and all the SMAs lining up with the 50 above the 100 and 100 above the 200, meaning there's definitely some bullish momentum in this market still. That doesn't mean it's impossible for price to break down, but if it does, and that will likely see price move to a new level of support, and we can see that we do have support at this area over here, and I'll just draw you guys a line quickly. So you can see previously when price moved into this level at 108.6, it did find some support. That level also coincides with the weekly S2, meaning a break below where we are currently trading will very likely see a move lower towards that area. However, if we do manage to keep this daily 100 moving average, break higher above the weekly pivot at 109.895, there's a good chance that we will see price continue to move higher with the weekly R1 a very good possible bullish target for that move, 110.42. In terms of our cryptocurrencies, let's quickly move to our cryptocurrencies, because I know that is something everybody is thinking about. So what we can see is we also had a head and shoulders stop for our cryptocurrencies. Looking at Bitcoin, that move then started to play out, and just projecting that pivot to that head and shoulders to the downside, and we can see there's the head and there's the projection down, and we projected down from the neckline. We can see that we did reach our head and shoulders target, and that target was very close to 30,000 level, which is a very strong level of support, and we can see the last rally has actually kicked off right from that level. For crypto, we also like using a different moving average than just the 200 moving average. I like using the 365 moving average, and that is just because With cryptocurrencies, we do trade 365 days a week. There's no weekends, there's no break on weekends like we have for the other instruments. So currently we can see that we have broken above the daily 100 moving average, but we do have the last 2 days 2 red candles, meaning there is some resistance, meaning if we do break back below that weekly pivot and a daily 100 moving average at 39,770, that would be a very important level. As a break below that could see price move lower once again towards support, with current support sitting at this area of well, let's just see, we have support from the monthly pivot over there, and we also have support from that that level which was previously resistance over there, which is 36,000. So 36,000, very important level to keep an eye on should we lose that 39,500 level. In terms of a break higher, if we do take out the highs from the current set of candles at about 42,500, that will then see price continue to move higher, with the current level of resistance at about 46,000. Sorry, that is the yearly R2 pivot, very strong level of resistance, also closely coinciding with that 200 daily moving average. And just to conclude, just briefly looking at Ethereum, we can see that Ethereum have had quite a run with 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, almost 12 consecutive bullish candles, meaning at this stage is a very good chance for a slight pullback at least, especially considering we are now in a resistance zone. Previously you can see in this area price has found some resistance, and if we use something like Fibonacci, so we can see there's our Fibonacci levels, with the important ones of course that 50 and 61 retracement levels. But what we can see is just looking at the previous support and also the moving averages, we can see this level over here would be a very good place for the market to pull back and find some support once again. That is very close to where we have our current daily 200 moving average, with that previous support zone currently at draw that line quickly at about 2,180. In terms of a break higher, I would need to see a break back above the highs of the current candles, 2,650, and that could give us a breakout towards the upper end of that right shoulder, where we have our weekly R2 at 2,935. And then of course in terms of a break below the daily 200 moving average, that will see price move way back towards the support level at the lower end of that range, about 1,770. That's a wrap. We hope you enjoyed this week's video. Please remember to support our channel by subscribing, and until next time, remember, trade smart and trade successful.